Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Chris Dunn on the line, and he's a CEO and founder over at Peak Enterprises, and this episode is part of our iConnections Global Alt New York edition, where we bring you the best of those who attended and participated in iConnections that just took place in New York. Chris, welcome to the show.
Thank you, Adam. Great to be here.
All right, Chris. So first thing I got to ask, so I left iConnections pretty early yesterday. I had to get out of there before the Knicks game started, all that stuff. I had to be back in LA to be recording today. What was it like in the city yesterday?
It was crazy, I have to say. Well, you weren't alone. It started to thin out late afternoon, so I think everyone had that in mind, and it was crazy. It was a roller coaster. I mean, I left the city, so I was just outside the city, but it was quite a game, insane game.
I was watching it on the plane. Can you imagine the entire plane, like all the different screens? It was live, of course, and all the screens were showing it. You could feel the depression at one point. You could feel the optimism. You could hear the I don't know. They probably weren't serving too much on there. They're like, I don't know.
Probably not a good idea.
Yeah. Oh, man, it was something else to watch, though. What an experience. So speaking of experiences, you're just coming off of iConnections. First off, how did you get introduced to the community as a whole? Where did all that begin? Have you been to events in the past, or give me some of the backstory?
No, we're actually fairly new members. I had heard about it. My company's been around for 15 years, but we've mostly sourced capital through institutional, I'll call them LPs. We only recently started to look at raising money in I'll call traditional fund format, like family office, high net worth. So someone had mentioned iConnections. We reached out. They said, hey, your timing is perfect. We had this New York event. So we're neophytes to it. I will say I found it very interesting and insightful and productive. We had a fair amount of meetings. You know how it works. They're very focused. So people, it's speed dating. It's like Match.com, but for capital, right? So people can see what we're doing, our company, which is the development and operations of manufactured housing, and we could seek out capital that we think is a good fit. So the meetings are very productive, and I thought the speakers were great, and the overall mood was good.
Oh, man, that's awesome. So talk a little bit about what it was like for you setting up meetings and stuff like that, because I know one of the secret sauces for them and is kind of like the algorithm and connecting people and all that. How many meetings did you do, just roughly? I'm not exact.
We did 10 over a day and a half. So
that's great.
Yeah, it was
That's
full.
Great.
I mean, honestly, we probably could have squeezed in a couple more, but
of course,
it felt full the first day and then the next morning. And essentially how it works is you set your profile up and what your background is and pretty much whatever you want to put in there. And we look at the hundreds of LPs, whether they're institutional, family office, and some make it clear that they're interested in real estate. Some make it clear they're not. So obviously the ones that are not, we just exclude from kind of our pipeline, our funnel.
Yeah.
And then we just send out meeting invitations and we get acceptances. So those are the 10 we got. And like I said, it's not like a cold call. They know exactly what, we had some materials in our profile so they could literally pull it down and see. And so it was very productive when you sit down and, focused.
I love it. That sounds great. And I think that's a great transition too. Let's get a little bit further into what you do. So tell us about Peak Enterprises. Let's start there.
So we are a developer and operator of manufactured housing communities. That's the industry really tries to embrace that term. Many people still refer to them as mobile home parks, although it's an interesting name because they're really not that mobile. But nonetheless, since they're factory built and transported to wherever it's ultimately going to reside, it, I think, took on that term. But I think it, over the years, developed a negative stigma. So I think the more accurate term is manufactured housing, and that's what the industry has kind of embraced. So we do everything from develop, from entitled land to put roads and utilities in and bring in homes, connect them, and sell and lease those homes. We do it all over the country. There was, until about 5 or 6 years ago, there was essentially no new supply for 30 years. And It's hard to think
really?
of another sector, in real estate where there has been no new supply in that long a period of time. And so before that, we were acquiring and just building a portfolio of communities around the country. When values got a little bit frothy, we pivoted toward development, and we were one of the few in the last 5 or 6 years that have been developing around the country. It's a little tricky because we haven't found too many municipalities that will rezone for manufactured housing. Unfortunately, we still fight the stigma and bias, and there's a lot of NIMBYism. But there are plenty of states and jurisdictions that do allow for it, and those are the ones we focus on. And that's what we've been doing over the last several years. And there's a lot of runway left, and there's certainly a need for it. And from a business perspective, it's great because, as I said, there's been essentially no new supply. It's a rounding error when you look at the percentage of housing stock. You have on the other side increasing demand. I mean, everything we read about the lack of affordable housing that's out there and available. So it's, from a business perspective, it's a great dynamic, but we also feel good about it because we are providing a great service to a much needed, for a much needed product in the demographic.
Yeah. How'd you get into this business? I mean, I see the term founder here. Like, how'd you get into this? How'd you get started?
It's a good question. I wish I could say it was all by design, but most things, it's not.
I wish I could say the same about podcasting, Chris, but I don't think it existed when I was in college.
Exactly. So I spent most of my career in banking and had a great career. I really enjoyed it. But I kind of hit a point where I was like, I'm ready for something different. That may have had something to do with the great financial crisis. So in 2011, I partnered up with a colleague. We raised money, at the time, more of a distressed debt strategy. And one of the first notes we acquired was on a manufactured housing community. We knew enough to be dangerous. I like to tell people now, I could say this, is that we really cut our teeth on that first asset. But the industry then was going under quite a transformation from, it's really what happened to multifamily 30, 40 years ago, which it went from, I'll call it mom and pop, small investors, to institutionalized. So and it's still undergoing that change. It's changed quite a bit in 15 years, but it was at the beginning stages of kind of the institutionalization. And so we saw that it was changing from a very capital light business to a very capital intensive business, which is one of the reasons why it was shifting to institutions, because they had the capital to deal with it. And when I say the capital, that's to bring homes in to increase your occupancy. The old model was manufacturers would bring a home to a community. They'd almost use it as showroom space. The community owner didn't have to buy it. It was really to promote that home. And if a resident liked it, the owner of that community would say, hey, call the factory, order your home. When it's ready, you'll bring it on, we'll hook it up, and you're good to go. Now, the community owners are the ones that are buying homes in bulk, bringing them to their communities, and then selling and leasing. So it's undergoing quite a shift, and naturally, smaller owner-operators just don't have the financial wherewithal to do that. So we saw that opportunity, and then, of course, we saw the lack of supply and the increasing demand, and any real estate investor loves that dynamic. And so that's really what drew us to the industry. We bought a second community, a third community, then we did a friends and family fund, and we were kind of off to the races at that point.
Wow, that's amazing. And something that you said earlier, I don't want to glance over. I kind of want to circle back to about the affordability housing crisis in America. Can you comment on that a little bit? Because I don't want to assume everybody knows.
Yeah, I mean, if you look at just where income levels are, and the old rule of thumb was, I think it's 30% of your gross income dedicated to housing, that has just been put under pressure because the cost of housing has gone up significantly. Income wages haven't kept up with that. That combined with they're just not developing in any sort of significant numbers lower cost housing. And when I say affordable, I'm referring to lowercase affordable. This isn't subsidized. So this is non-subsidized, non-governmental supported housing. And most builders and developers, when they're building homes or multifamily projects, it's hard to make the math work if you're really targeting lower rent options or lower cost options. So most of the new housing stock that's brought online every year isn't really built for the lower income demographic. Manufactured housing is just comparatively much less expensive. It's factory built, climate controlled, and so it's cheaper. There's some transport costs, but to give you, some numbers, I'll put some numbers to it. A 3 to 4 bedroom home, and this is probably 1,600 square feet, so small by a single family home comparison, but we could buy on the low end maybe for $65,000. So we'll resell that. Honestly, not at much more of a markup. The buyer will buy that home from us and either finance it from us because we provide that, or get third-party financing from a bank or some other source, and they'll pay site rent to us. So they'll put their home on the site, and then they pay a site rent because, of course, we maintain the roads, we have amenities, clubhouse, pools, and whatnot. So all the CapEx that would normally be handled by an, quote, homeowner, we handle that. They're responsible for their home. But it's when you combine those two, the payment on the site rent and the home payment, it's really almost impossible to find a housing that nice at that price, that monthly nut. And so that's really why it's probably the best solution to affordable housing, to be honest with you.
Yeah, I see that. And you mentioned certain areas, I don't know if you said municipalities or states or cities or otherwise, but what is friendly right now? Like, where are some of the opportunities you're seeing?
We've done most of our development. We're headquartered in Kansas City, and so we've done some projects in that market. Most of it's been in Texas, and then we target areas that are high growth states and MSAs, and where, at least on the development side, where it's easier to develop and there's maybe slightly less NIMBYism, which is not in my backyard, is what that stands for. So you don't have as much of a stigma or bias, because unfortunately we do run into that. People will when I say people, municipalities will recognize a need for affordable housing in their community. They just don't want to be the one to provide it necessarily, at least our form of affordable housing, which is a shame, because if you look at a new, recently developed community, this is very nice housing stock, nice interior finishes. Our amenities include nice clubhouses, fitness centers, pools, pickleball courts, playgrounds. It's very nice. We target families. It's very family friendly, but it's just hard to overcome what I call the Breaking Bad stigma, which I'm a big fan of that show. But of course, they perpetuated that stigma because they're cooking meth in their trailer park, essentially. And it's hard to overcome that stigma. And it's not a fair stigma because it's really just a outdated and misplaced perception.
Yeah. Talk a little about your fund. Like, you're currently doing a raise, is that correct?
That's correct. So on our developments, we grew a little differently, I guess. We're fortunate enough to access capital through larger institutions. And that's how, up until recently, we've been capitalizing most of our deals. And we will, on the development side, because those are bigger checks and bigger developments. But we do see a lot of opportunities, smaller opportunities, in the $5 to $20 million acquisition. And for the institutions that we deal with, that's a bit small for them. But we hate to pass up on those opportunities. So I finally said, you know what, we're going to go back to really when we started and raise just a traditional fund, focus on mostly family office, some high net worths or smaller institutions, RIAs, and it'll be a value add fund. So we're targeting 15 to 17% levered IRRs, and it's going to be value add manufactured housing communities.
Amazing. Chris, this has been great having you on the show today and learning more about Peak Enterprises and the work you're doing there. If somebody's listening to this and they want to follow up, they want to learn more, how do they connect?
I appreciate that, Adam. They can find us, probably the easiest place is through our website. It is www.peakenterprises.com, just how it's spelled. And you could reach us directly that way. We have a current offering page on our website, which people can access our fund, and they could reach me through our website.
Fantastic. And for everybody listening, just so you know, we'll definitely put some links in the show notes so that you can just click on the links and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So hit that subscribe or follow button. And Chris, thanks again for coming on.
Thank you. I really appreciate it.